Good afternoon, everyone. Welcome to our Tuesday webinar. My name is Aristotle Kumpis. I'm one of the investment counselors with R.E.A.L Network. And if you're on this call today, you have some interest in what R.E.A.L Network is about, and you also have some interest in the Dallas-Fort Worth area. So you're wanting to learn a little bit about both things today. So before we get started, I just wanted to state something real quickly. On the bottom right-hand side of your screen, there is a box for questions. So as we go through the presentation, if you have any questions that you have, I will get to them towards the end of the call here, and we'll try to answer as many as we can before we end the call. So just if you're thinking about something or if you have something on your mind, just feel free to write that down, jot it down, and I'll get to it at the end of the presentation. So sit back and enjoy this presentation, and let's get going. So before we get started, I want to mention some upcoming webinars and events. This Thursday, we're going to have another webinar on Dallas and Fort Worth, but that's called our Income Property Showcase. And basically, this is where we have our affiliate that we work with in Dallas. She's going to be on the call with us, and we're really going to just go through a whole bunch of available properties that she has. And in order for you to get access to the Thursday webinars, you have to have a strategy session with myself or one of our other investment counselors. And so basically, we want to sit down with you for 30 minutes on the phone, get an idea of what you're looking for, figure out if you're looking to use your IRA for purchasing properties, or if you have a home equity line of credit that you want to use, or some other method that you're thinking about. A strategy session is going to be extremely helpful for you to let us know exactly what you're looking to do and how to do it. And so if you want to schedule a strategy session, you would need to just email and basically email me at Aristotle@realwealthnetwork.com. And that's a way you can set up a strategy session. Again, it's about a 30-minute phone call. So that's how you get on the Thursday webinars. Tuesday, the following week, we're going to be having our Jacksonville and Ocala Punta Gorda overview. So it's the same event that's going to happen like today, but only in Jacksonville. And then on the following Thursday after that, there's going to be another webinar in Jacksonville with our affiliate, again, talking more about specific properties. So, and then on Thursday, I'm sorry, let me go ahead here. The next live event, so we do events every month, almost every month here in California. And the next one coming up is July 13th in San Mateo and July 14th in Los Angeles. We just had one this month. We're not going to have one in June. So the next one is July. And then the big event that we have coming up is August 10th in Cleveland, Ohio. So normally twice a year, we have an event on the East Coast or towards the east part of the U.S., and we like to cater towards our members that are based out that way. So if you can come out to that, that's a 2-day event. It's, again, Saturday, August 10th, and it's actually Sunday. So Saturday, we fly in all of our affiliates. So all the 15 different markets that we recommend, we have all of our affiliates come out, and they give a quick presentation in the market. And it's a great networking event. We have lunch, we have dinner, and then the following Sunday is when we do a property tour in Cleveland. So if you're interested in that, there'll be more details to come down the road as far as specific times and all that stuff. So that's going to be our next live event on the East Coast here. So just a little bit about myself real quickly. So I have 10 years experience as an investment counselor. I've been with R.E.A.L Network for over 4 years. And I have a lot of experience before working with R.E.A.L Network is helping the clients understand how to build a portfolio of properties and how to basically leverage their money and create passive income for life. And so I have a lot of experience with that, working with investors. My family has owned real estate for over 30 years. It's kind of how I got the bug and the itch in real estate is I saw my uncles and my father collecting rent checks and managing their own properties when I was a small kid. And as I grew older, I kind of really learned to understand what that was and how it worked. And that's kind of how I wanted to get into real estate investing. And I currently own 6 rental properties in 3 different cities. So that's kind of a little bit about me. So our purpose, our slogan that you can see in the bold is real estate investing simplified. There's Kathy and Rich, the co-founders of the company. If you've been listening to Kathy's podcast, that's great. She has an amazing podcast that we do. We actually put out several a week. And if you don't know how to get those, you can go on iTunes or Stitcher, or I think there's a lot of other resources you can get podcasts from. But we have a great podcast. Anyway, the whole point of our company is to help simplify the process of acquiring these small rental properties. And the paragraph below says we help you create passive income so you can live life on your own terms. So what that means is that we are helping you to build a portfolio of properties where you can have passive income to either supplement your income now or down the road, or quit your job down the road, or just have a retirement fund, or even just diversify what your current retirement might look like. So in essence, we are helping you. We have all the resources in place. We have all the contractors, all the property management companies. We have everything to make it work in one network here. So you don't have to go out and find your own brokers, find your own property management companies. We really have done everything to keep it really simple. So why Real Wealth Network? So number one, educate yourself. It's free. So we have a lot of information on our website. If you go to realwealthnetwork.com, you'll see under the Invest tab, there's an investor resource section, and we have all kinds of topics like asset protection, tax strategies, how to read inspection reports, how to read appraisal reports, financing webinars. So we have a lot of free content on there. A lot of them are from our live events, and some of them are from just webinars that we've done over the years, but the content is amazing. So educate yourself there. We have live events, like I said, in California almost every month. We do podcasts every week, so it's all free information there. So we even have a search bar on the top of our website, and I always recommend for people to type in a topic there, and you'll have a lot of information that pulls up regarding what you're looking for. Number two, when you're ready to invest, let's connect. So basically, what I was saying earlier is that when you're ready to connect with us and you want to look at markets, you want to sit down with us and figure out what the best market or markets would be for you to start investing in, you want to have a strategy session with us, and that's complimentary. There's no charge for that. It's a 30-minute phone call, and so that's a great way to connect with us. And number three, we connect you with resources, and we have resources such as lenders. We have CPAs and tax accountants and attorneys, and all different types of resources that you would need or that you might need while you start your venture on real estate investing. So we've got a lot of resources here. You don't have to go find your own. We've already done all this for you. So again, it's all free on our website, so take advantage of that. All right, so let's go through a couple of the important FAQs. So one, we don't help our members flip houses. We are a buy and hold company. We think that buying and holding a rental property for long term is the best way to create wealth. Flipping houses is great, short-term cash, but it requires a lot of time and sometimes a lot of money. But our philosophy and what we educate on is basically a lot simpler approach to it. So anyone can practically do this. Step two, if you plan to purchase a property with cash, you need at least $60,000. I think you probably need a little bit more than that, but we have some properties, for example, in Detroit that you can buy for about $65,000 to $70,000, not including closing costs. But just keep that in mind. If you do want to pay cash, we have some properties that are pretty inexpensive. If you plan to use your IRA to invest in, you need to have at least $50,000 in your IRA. That's if you're going to finance, because you can get financing with your IRA. A lot of people don't know that. You can leverage your property or a property in your IRA. And we have webinars on that. And again, in a strategy session phone call, I would go over that with you and how all that works and the pros and cons to that. And but if you're going to pay cash, you can pay cash for property in your IRA. You would certainly need more than that. Like I said, $60,000 to $70,000, but that's available to you too. And if you're going to get financing, here are just some of the requirements for financing. Credit score of at least 680. I think you can go down to like 650 or 660, but the higher the credit rating you have, the higher or the lower interest rate you're going to get. So if you have a higher credit score, you're going to be in a better position. To your job history at a U.S. company, we've debated this before. It's more like 1 year, if any, but you do need some kind of history at an employment. At least 20% down payment. So that's minimum is 20% down payment for single-family homes. If you want to get into multifamily, like a 2-unit or like a duplex or triplex, it's an automatic 25% down. You need 6 months reserves. You need a low debt-to-income ratio. I think the limit for debt-to-income ratio is about 45 to 50%. So lenders won't go above that. So just keep that in mind. And then no more than 10 finance properties on your current credit report. That's per person. So a lot of times you have a husband and wife or spouse where they both are employed and they want to purchase a lot of properties over maybe 5 or 10 years. If you're both qualified for financing, you can actually get up to 10 loans each. So you can almost get a maximum of 20 as long as you qualify for that. If you're beyond that limit and you don't have any other ways of finance, we do have a couple other lenders that we can refer you to that offer other programs that can help you finance more properties besides conventional financing. All right, so this is just our disclaimer. We always have to read this. And I'm just going to read it word for word real quickly. So it just says real estate purchases are subject to investment risks, including the possible loss of amounts invested. While Real Wealth Network uses its best efforts and proven protocols to screen, review, and understand the operations of each of its affiliates and the related companies, we cannot and do not guarantee the performance of investments offered through these companies. It is a responsibility of you, the investor, to perform his or her own due diligence and analysis before retaining an affiliate and prior to purchasing an investment property. An affiliate, by the way, is the team that we work with in the market, just so you know. And for anyone purchasing a property, Real Wealth Network requires you to, 1, order an inspection report from a licensed home inspector, and 2, order an appraisal. And of course, if you're financing, the lender's going to order that for you. If you're paying cash, we still require you to get an appraisal just so you know what you're buying. So get that out of the way. Okay, so Real Wealth affiliates. So I mentioned the affiliate is the team on the ground that we work with there in a specific market. They're the ones who have the properties, they renovate them, they manage them. So I'm not going to go through these markets, but you can see most of the affiliates that we work with right now are in the Midwest and South of the U.S. Why? Well, these are still very affordable areas, and the job growth is still very strong, and the cash flow is very good, and we have great teams that work there. The star on the map there, the big blue star you see there, almost in the center of the center of your screen there, that's Dallas. That's what we're going to be talking about today. That's the market that we're in today. So why Dallas, North Texas? I'm sure a lot of you have heard a lot about Dallas, North Texas, what's going on there. It's pretty phenomenal. So let's go through some of these bullet points here. First of all, it's home to over 10,000 corporate headquarters. That's amazing. It's massive. Home to 23 Fortune 500 companies. Unemployment rate is 3.2% as of January this year. I think the national average right now is about 4% unemployment, so it's well below. So Dallas-Fort Worth area is well below that. And by the way, when I say Dallas-Fort Worth, we're talking about the whole metropolitan area, not just the city of Dallas and Fort Worth. So just the whole metropolitan area. There's no state or corporate income tax. This is pretty important. So this is why a lot of businesses are moving to Texas, because they don't have to pay corporate income tax. It's pretty amazing. Population and job growth is significantly higher than the national average, and there's a low cost of living. And the last one here is that the Texas Enterprise Fund, you can look this up, but this was a state-funded project here that basically had $300 million to use to attract businesses to Texas. I'm not sure from what time frame, but it resulted in $6.3 billion in capital investment from out-of-state companies. That's amazing. I would love to take $300 million and turn that into $6.3 billion. So that was an amazing fund. So pretty awesome. A lot of business there in Texas and in the Dallas area. Okay, population growth. So from 2010 to 2018, there was a 15.15% change. That number might not seem high to people, but I think most markets are like 2 or 3% population change. So this is a massive 15. So this is incredible. So you can really see it's ramping up and it continues to go up. Right now, the population of the Dallas metro area is 7.6 million. So again, that is including Fort Worth. And so that's a massive area. It's a lot of people live in this area here. The job growth, this is amazing. So if you look from 2017 to 2018, so only a year, you can see there was 116,300 jobs that were added to just the Dallas metro area. It's amazing. And you can kind of see like in December of 2017 to August 2018, it really took off. I'm not really sure what happened there, but it really ramped up there. And that's a 3.23% annual growth. So again, that's very impressive. So Tarrant County is in Fort Worth. You can see 40% of the households are renters, and Dallas County, 50% of the households are renters. Well, why are there so many renters? Well, part of it has to do with a lot of transients that are coming in. So you have a lot of people who are moving in from places like California, Washington, all over the place, that are moving to the Dallas area for work. And they're not going to buy a home necessarily, they're going to rent. So that is increasing the amount of renters that are coming in here, which is going to benefit you and me who are investors. So a lot of renters there. These are just some of the corporate names you see on the screen. I'm not going to read them all, but you can see there's a lot of big names already there. And there's so many more to name, we just don't have room for them, but there's just a few. Corporate relocation example. So this is pretty amazing. So I'm personally based in the Los Angeles area, and Toyota was based in Torrance. If you're on this call and you're from California, you might know Toyota had their headquarters there in Torrance. Well, they moved to Plano about a year ago, I think, and they transferred 4,000 employees down. And then State Farm relocated from State Farm relocated down from Illinois to Richardson, Texas, and they brought 8,000 employees there. So that's pretty impressive. The Dallas-Fort Worth International Airport. So I'm sure a lot of you have flown into Dallas Airport. It's gigantic. It's a major economic distribution hub. It's the third busiest airport in the world. That's huge. There's 4 runways, I think, at least on that airport. It's very big. Driver of economic growth in the region. So lots of jobs, lots of logistics coming in there. It's a primary hub for American Airlines, which is the largest airline in the world. The airport is larger than all of Manhattan, so it's 28.9 square miles versus 22.8 square miles. That's pretty impressive. I know whenever I fly in there and you taxi to your terminal, it takes like 10 minutes. It's such a long drive because it's such a huge airport. And this is an interesting stat here. During the 2008 recession, Dallas invested in airport expansion rather than cut budgets as other cities did. Just a lot of jobs there at the airport too. So infrastructure and expansion. So thousands of miles of highways, second largest number of freeway miles per capita in the U.S. Easy to navigate bus and light rail systems. So they have lots of public transportation, high speed limits, HOV lanes, and toll roads. Those are constantly being built out there to connect these cities to the outer cities to the inner part of Dallas and Fort Worth. And it's designed to enable people to commute longer distances in less time, opening more areas to population growth and development. And you're going to see a little bit about some of the properties in the area that we're going to talk about and how and why that's important. The job centers. A lot of people think that the jobs are in the city of most places, but they're actually in the Dallas-Fort Worth market. You'll see in the second bullet point here that over 50% of these big companies of the Fortune 500 companies are located in the suburbs outside of the city. And so that's important to know too. And so basically it allows you to live just about anywhere in the suburbs and easily get to employment, even newer and less developed areas, often expanding highways that are in the path of growth. So there are areas that we're going to look at a couple of properties here in a minute, but there are some areas in the Dallas-Fort Worth area that are 30 minutes to an hour away that we're recommending, but there's infrastructure going in. There's toll roads, there's highways, new freeways being built around the city to get to these places in a faster amount of time. So living further away is actually not necessarily a bad thing because there's going to be a lot of infrastructure going in, as there is already. The challenge for investors, cash flow. So what do we mean by that? Let me back up here. So just real quickly, Dallas-Fort Worth area has not really been a market for high cash flow returns. There's cash flow, but it's for some people it might not suit you because if you're looking for a really high return, you're not going to get that. And the reason why is because it's expensive. Dallas, the home prices are getting more expensive. And as you can see in this next slide here, there we go, the median home value. So from 2012 to 2018, you can see the metro area in blue was just around 120,000, and now it's over 181,000. So just in 6 years. And then if you look at the United States, which is up on top, that's obviously rising pretty quickly, but it's still very well below that median home value. And then the very bottom line there is that RWN neighborhoods. These are the areas that we're recommending our investors to look and buy property, and so it's well below both of those. The median monthly rent, this is pretty amazing too, again, 6-year span. So you can see the United States in the yellow here has been kind of slowly keeping pace, while the metro area of Dallas has skyrocketed. So you can see rents have gone up from $1,225 a month in 2012 all the way up to almost $1,500 a month in 2018. So rents have gone up quite a bit. So that's another reason why people are liking to invest here, because rents are steadily going. Some of the other markets that we recommend, they don't go up as much, but there's so much demand there, so many people moving here. That's what's going on. Okay, so where to invest for cash flow? Along highways. So, and again, on Thursday, our affiliate will talk more in depth about the specific areas and stuff, but that's kind of where the cash flow is at. The prices are a lot lower near these areas. The cities with their own employment centers, but close enough to drive to other employment centers and Fortune 500 companies. So yeah, people don't mind commuting. If you live in a city where you have to commute already, people don't mind driving 30 to 45 minutes or even an hour away sometimes to have a bigger house or a less expensive house with a yard or whatever. They will make that drive, and so that's something to keep in mind. The redevelopment in growing areas. So again, we're recommending areas that are up and coming. There's shopping centers going in. There's people are renovating their homes in these neighborhoods. There's a lot of things happening. And these aren't things that happen in a couple of years. They happen over 5 or 10 or 20 years. So you have to see the big picture here. Close proximity to schools and colleges, et cetera. We're not recommending farms. We're not recommending an area where there's like 4 houses in the middle of nowhere. That's not what we're recommending. And again, the last bullet point to go along with that, not in high risk, high crime areas like most of Dallas and Tarrant County. I don't know what the crime rate is in Dallas, the city, but we don't recommend investing really in any city and any market. So any downtown area per se, those are usually riskier. So let's go through a few properties before we kind of wrap up and answer some questions here. So let's see here. So this is in Sherman, Texas. Sherman is a city or suburb north of Dallas. I think it's about 45 minutes to an hour north of the city here. This is a duplex. So this is just an example. These are all brand new construction, by the way. Well, most of them are that we're going to talk about. This is a 3-bedroom, 2-bath, 1 garage per side duplex. It's being offered at $295,000. Now, I mentioned earlier with a multi-family property, you have to put 25% down. So 25% down on this. We're using an interest rate of 5.25%. Again, that's going to change depending on what you qualify for, but it's just a projected interest rate. Closing costs, $73.75. Again, that's going to change depending on certain things. But your initial capital invested would require you of at least $80,000. Principal and interest on this, if you were to do it, if you got qualified at this interest rate and 25% down, you're looking at about a $1,400 a month mortgage payment, including principal and interest. Your taxes are $614 a month. Insurance is estimated at $110. Property management is 6.5%, and your total monthly cost is $22.95. The monthly rental income, the total amount of rent, the gross rent on this house is projected to be at $2,550 a month. So that leaves you with $438 basically for that is what that comes out to be. So, but again, this is a brand new duplex, so everything's brand new in it, which is nice. So this is just one example. Here's a single family home. It's built in Denison. Denison is just, I believe, again, I don't have a map here, but I think it's just north, just a little bit north or northeast of Sherman. And this is a 3-bedroom, 2-bath, 1,300 square foot home. These are nice. There's no garages or anything on them, but they're very simple, basic homes. They're great for rental properties. This one is being offered at $155,000. It's a beautiful looking home. A lot of people would say they love to live in that house, but it's very nice. $31,000 down payment. That's with 20% down. Your closing costs are $3,100. That will probably be a little higher in my opinion, but again, it's going to vary a little bit. So we always say these are projections because we don't know how much you're going to put down, what you're going to qualify for. So these are just projections. So roughly, you need about $35,000 or so to invest in this property. Your principal and interest would be around $685. Taxes are $350. So your insurance is about $70, and your property management, again, at 6.5% is $87, which is based off the rent there at $1,350 a month. That's your estimated monthly rent or your income there. So that gives you a cash flow of about $157 a month. So the nice thing is about these, again, they're brand new, so you can't anticipate a lot of maintenance. I mean, you're going to have maintenance, but the larger things like the roof and the HVAC system, that's all brand new. Again, you shouldn't have too many maintenance issues with that stuff. But again, we just say that because it is brand new, but anything can happen. So, but again, that's a very nice looking home for the money. Here's another one in Princeton, Texas. This is not a new construction, but it's newer. It's a 2006 build. You can see there. It's a 3-bedroom, 2-bath, 2-car garage. And this one's being offered at $195. I believe this is in a really nice neighborhood. It's obviously an established neighborhood. And the picture there says pre-rehab, so it's kind of an ugly picture, but they'll probably do some landscaping, and they'll do, this is what they call a turnkey property. This will be renovated to some extent. New carpet, new paint, everything will be looked at. The roof, the HVAC system will all be looked at for you and upgraded if it needs to be. But this one requires about $40,000 down payment. Closing costs about $4,000. You're looking at about $4,200 to maybe $4,300. I'm sorry, $4,300 to $4,400 total capital needed. Principal and interest $861, taxes $349. Now this is interesting. So let me back up actually. So there's a line here I forgot to read that says rehab cost $0. So on the turnkey properties, there's no rehab cost that has to come out of your pocket for the rehab, which is nice. And again, on a strategy session, we can go over that. But on a turnkey property, there's no money out of pocket that you have to pay to rehab the property, which is nice. It's all included. So this one does have an HOA. Some people say, well, I don't like HOAs. Well, Most of us don't like HOAs, mostly because of the regulations. But I can tell you on the single-family homes in these neighborhoods, again, this is $30 a month. This is $3 to $4 a year for the HOA. This is basically just to keep the neighborhood kept well, make sure that your neighbor's not painting their house blue, making sure that the lawn is not overgrown, your neighbor's lawn is not overgrown, and things like that. That actually, in the long run, keeps the values of these homes steady or goes up after a while. So that's a good thing. So HOAs are not bad. We don't recommend buying condos. We don't really have any condos that we offer besides some vacation condos, but we don't offer condos or townhomes because those also have high HOAs. So getting down to the bottom of this one, the projected rent on this one is $1,550 a month, and the projected cash was about $130 a month on this one. One thing I do want to note before we get to some questions here is that we don't put in vacancy or maintenance, and these are things that we can go over on the strategy session. But basically, we don't factor that in because everyone calculates it differently. But you should calculate it in. You should have reserves, and you should calculate for vacancies and things like that. We do recommend, and I tell all my clients this, I do recommend that you have, at least 3 to 5% reserves based on the value of the property. So if you're buying a property for $100,000, you should have at least $3,000 to $5,000 set aside to accommodate maintenance for the first year, a turnover for the first year, and that's going to keep you in a much better position rather than just putting all your money that you have in your savings account towards a property, not having any reserves. We want to make sure that you have that. So, but again, everyone budgets it differently. If you want to calculate it in a monthly, you can do it that way. If you want to calculate it annually, or if you want to have the reserves, like I was mentioning, that's fine too. So, okay, so I want to go through a couple questions here. Somebody asked, do we have any multifamily examples to share? We did go through one. I don't know if you were late to the call. We did have a duplex in Sherman that we had up there for $295,000. We do have other markets that have turnkey multifamily. So if you're into multifamilies, and I'm talking about 2 to 4 units, we do offer those. Again, set up a time to talk with me, and we can go over that more in detail. But yeah, we do offer turnkey and also new construction multifamily. So. What other questions do we have here? Someone said, what is the time frame for these new construction homes? So the new construction homes, it depends. Our affiliate, if you're able to join the webinar on Thursday and have a strategy session with us before that Thursday webinar, she'll talk about the time frame. We have several that are near completion and some that just started. So it really depends on your situation. If you're doing a 1031 exchange, for example, we would certainly be able to help you find the properties. We do that a lot. We have a lot of people who are doing 1031 exchanges, and then we're able to get them into some new construction properties because the construction's already started. So it's easy enough. Okay, any other questions here? So that's all the questions that were here. So not many questions here today, but that's okay. I mean, that's what our strategy session is for. So again, if you're interested in having a strategy session with myself, again, 30-minute call. You can email me. My email address is aristotle@realwealthnetwork.com. It's ARISTOTLE @realwealthnetwork.com. And we can set up a time today, tomorrow, even Thursday before the webinar, and we can go over what you're exactly looking to do, and then we can get you signed up for the Thursday webinar so you can actually see live properties, because on Thursday, again, we're going to go through live properties that are available. So basically here, it says what's next. I already covered all that stuff. And it says if you're not interested in Dallas at this time, but you want to learn more about the other markets, you can schedule the time to connect with me either way. So if Dallas is not a market of interest to you, but you have interest in other markets, or again, you just want to bounce ideas off of us, one of the investment counselors, just contact us anyway, and we'd be more than happy to set that up for you. Let me see here. Oh, I think another question came in here. We have a couple more minutes here. They ask, can you speak to the high property tax in Texas? So I'm not an expert in Dallas, but I know that she'll probably go over that tax rate. I think the tax rate's like anywhere from 2 to 2.8% or something like that, in some of these counties. But what they will do, I know our Houston team does this too, is they will help when you get I think your property is assessed every year. They're in Dallas as well as Houston. Is every year our property management company will help you fight that so they can keep your property taxes down. So that's a great thing. And so you'll get emails on that, and they help you deal with that. But I don't know specific amounts and stuff like that. Texas is an interesting state as far as recording real estate. It operates a little differently, but tax rates are not that high there compared to other places. There are other places in the U.S. that are pretty high. So anyway, so just kind of wanted to sum this up here. So yeah, if you had any questions or you wanted to set up a time to talk again, that's what you do. And that's basically the end of the presentation here. So again, if you have any questions, email us. But I appreciate your time, and hopefully we'll get to talk with you before the Thursday webinar. And if not, please set up a time with us either way. And we hope you guys have a great rest of your day. I appreciate your time.